Okay, now I'm gonna start because I'm gonna start and I'm gonna tell you what my plan is for today's session. The trade setups are identical to what I showed you on Monday. I will have a look at them and see where we are and what we've done in the meantime for BTC and ETH. XRP is a little bit different because it's done a lower low. So the trade setups won't be taking more than 5 minutes. I will just have a look at what news is going to come out today, give you a little bit of news of what's come out this week, mainly the states downgraded credit rate, and then if you're not aware of that, and then I'm going to look at the monthly charts for ETH and BTC to see how they have actually left the previous bear market. I have 3 examples for BTC and 2 examples for ETH with reference to the monthly MAs as the chart is on Bitstamp, because it has a long history there, longer than Bybit. So that's going to be the core of the session, checking to see what happens on the monthly chart, what happens generally in the last part of the year before a bear market finishes and a bull market starts. And we will see, of course, that there are differences, but there are also similarities with the situation that we're in at the moment. So for now, I'll just start with the calendar. And what we have today is the non-farm employment change. Now, we know that at the moment, we've had the ADP, where was it? The JOLTS, the ADP non-farm employment change, which came out quite strong. It didn't come out as strong as previously, but again, it came out almost 150% what they were expecting. So they were expecting 191K and it came out 324. And that is the employment growth. We know that the Fed in the States do not want the job market to thrive, because that will lead to higher inflation and higher rates. That's again great labor market. There was a little bit of data, the manufacturing PMI, that was the ISM manufacturing PMI, that was a little bit smaller than what was expected, and that's actually a good thing, because it means that again, the prices are going up, but I'm trying to explain it. Let me go into the description. I got it when so the industry is not expanding, so it's stagnating. Production is stagnating, and I think again that's a good idea. That's a good indicator for the Fed to see it as slowing down, because if the industry is not expanding, people in the long run will be getting less jobs, less salary increases, less inflation. A bit like that. It's a little bit, it's hard to wrap my head around all of this, because I know I should be looking for positive numbers, but at the moment, the way we are, negative numbers, the drawback of the drawdown of the economy in the States would actually stabilize the market a little bit better, because at the moment it's a mixed bag, and we can see that in the chart. We've got some lift. We've got volumes going in for longs, and I'll show you those vector candles. But at the same time, we are liquidating longs. The market makers are liquidating longs as they're building theirs. So it's definitely a longer time frame at play at the moment. I'm looking at the daily and the 4 hour. Very rarely do I switch to the 1 hour. Even my entries on the 4 hour, even my entries, I'm taking them on the 4 hour. With XRP's lift, I was thinking that I might change to entries on the 15-minute. But on the contrary, it's because of where we are right now with all this choppy volatility. I think it's better to stick to the 4 hour and the daily for trading reference for the time frames. So today we do have before New York we have the news, so that means it's the market will probably be set by the time New York starts. We'll see a little bit of volatility, and then and then we'll see either continuation downside or reversal to the upside with support gained. We don't have that at the moment. We don't have either. We haven't gained support. We haven't broken lows. We are right where we were on Monday. The DXY has been going up all this time. So the DXY has had since Monday, it's had 4 days of higher highs and higher lows. Yesterday's candle is a red one, and we are seeing the stock on the daily cross down today. So the DXY is meeting important resistance. It's meeting the 50 EMA. It broke through it, but it has to move away from it and backtest it. Just being above it and closing above it doesn't mean that its trend is changed. For a trend to change, we need movement away from that daily EMA when it breaks. I'm going to switch off the trader's reality so that you see where we are. So this is the daily time frame, and we are above this support level. We are above the 20 MA on the daily for the DXY, but we haven't yet backtested. So coming down to backtest the 20 MA will be the deciding factor of this continuation. If the DXY continues to the upside, we're going to take a tumble on the higher risk assets, the stocks and our coins. SPX. Now, the S&P is a bit challenging to read right now because of the stock on the daily. We have seen a little bit of pushback on the daily from the downside. It seems like the rally is getting weaker, but the daily stock has come down considerably, like almost reached the bottom, while price action stays high. Yes, we closed yesterday and the day before, Wednesday and Thursday, we closed below the 20 MA, which could be an indication of this rally starting to form a peak formation. So at the moment, this is not a peak formation on the daily. This is just a little swing. It is a 4-hour swing, 2 candles up. That's not a daily swing for an M formation. So what I'm looking for in terms of the S&P signaling a correction, and we know the coins will follow, is a drop, a lift, a failure to break the previous high, as no, it didn't do here. It broke it just by a little bit. And then the breaking of the neckline. So drop, lift, push down, a little back test of the previous level, push down lower. So these would be the moves that I expect, that I'm waiting for to see in the S&P to confirm a direction for the market, because at the moment it's just liquidating shorts, squeezing shorts, and doing small higher highs on the daily. It's done a lot of bearish divergences on the daily. And if we're looking at the weekly, the stock on the weekly is down. The regular RSI is down as well, and we seem to be having a bit of a top out signal in the regular weekly RSI as well. But again, we need to see on the, if we're looking at the weekly trend, we need to take our signals on the daily. And by signals, I mean those moments when we anticipate that that's a turning point. So we haven't had that top out formation on the daily yet. Now, could this be a V-shaped play? Yes, it could be a V-shaped play. I'm usually rallies would finish in a V-shaped play just to catch everybody out. And by a V-shaped play, I just want to take you back to the charts, to moments like these where we've had a V. So it broke the 20, did a little back test, a little bit of a sideways, stayed below it, and here it was just dropping down and continuing. And it was basically because it was hitting the trend line. It had, of course, given previous signals in terms of topping out, mainly by reaching, there we go, mainly by reaching the 20 MA and getting rejected. So that would be a big signal if we were to see it. At the moment, we are at the starting phases of this move happening. And a V-shaped play would mean breaking the 20 forcefully, pushing down, or staying down for a little while and then making a decisive move. But what we need for a V-shaped play to be confirmed is we need strong candles on the daily, like these ones here, like these ones here, and like these ones here. So we need something like that. We don't have it. We don't have such strong candles at the moment, which would signal a V-shape reversal for the S&P. What we have right now is small green candles signaling weakness of the rally. But could we have a blow off top? Could we see this staying sideways? Yes, we could. Summer is notorious for being like that. Okay, now I'm just gonna quickly have a look at the trade setups, and I've done a little bit of a change. I posted it earlier this week after Monday, I believe, because I started Monday having a different, a broader image. Oh, what am I doing there? Broader image from the from what it actually turned out to be. That's the monthly chart. Where did I put? I'm sorry, I restarted the computer before the session just to make sure everything is working. Okay. Okay, I'm gonna be using this for trade setups. I know I have it on the MA chart, but I'll be using this because it's clearer and it's on the daily and it has all the support that I would require for a I would love this to, there we go, to show you the trend. Go. Okay, super. So here is the daily, and what we have in the daily at the moment is a lot of choppy sideways for BTC, but it's trending against, it's trending along the 50, the VWAP, the 55 VMA on the daily, and the VWAP. The stock on the daily has crossed up. To me, when it does that, when it spends so much time in choppy sideways, and all it does is pierce a little bit through the support, and just by a little bit break the previous low, to me this is a signal of consolidation for another swing up. That swing up can be a 1-2 for reversal, which would turn this into a triple top formation, a head and shoulders, or it could be, after all this sideways, a higher high. There is still space for Bitcoin dominance to go up, and it goes up when the price goes up, when people start piling into Bitcoin. Now, we've had, in my opinion, reasons to believe it's going both down and up. To me, the technical side and my indicators would show a reversal. However, I don't have confirmation for those reversals yet, for that reversal yet. So we are at the main trade setup that I would be focused on at the moment, and I'm doing so with ETH, with the trade that I'm in, is I'm looking to see the daily turned into support. If we close today above the 20 EMA on the daily, one day of the weekend will continue that. One day will correct, which is probably getting an entry, a 1-2 on the daily, on the 1 hour or the 4 hour chart, and then on Monday will continue. And again, on Monday there could be a little bit of a fake move to the downside, but it's likely to continue the trend. And closing above the 20 after all of this consolidation, I think, will lead to a higher high. And if we're looking at the pattern that we're in, we are in a descending channel, and we've had one, again, not counting this, 1, 2, 3, 4, 5. We would need one more touch to the bottom, but I have seen daily channels, because of all this choppiness, break without that. So they break out earlier than the 4 hour one would. I think if we're going to go into the 4 hour, we might find 3 touches to the top, 3 touches to the bottom. But in my opinion, for us to look at a valid trade, if we were to look at a technical trade, short down, because it's not just shorting, oh, we're shorting because we have, I've been hearing all sorts of ideas, oh, let's short because the weekly stock has crossed down. Yes, the weekly is down, which means that the immediate momentum for the weekly is down. However, we have the daily that has actually crossed up and has been holding the support. And after so much sideways, it couldn't break. There's still buying support. There are still orders at the 29K area. That still holds. We need to see if this can reverse, and this is the story of our trades. But that would be waiting for the confirmation for either direction and risking as little as you can, because we are in Death Valley. Death Valley is the final, is my Roy came up with it, but I adopted it as well. It's the last third of any pattern, whether we're looking at a triangle, a channel, an arc. The last third is Death Valley, and Death Valley is where volatility happens both ways, and it's better to either wait for the confirmation if you haven't taken a position on either edge, or and risk as little as you can. So long story short, to me, there are signals of a reversal to the upside, but we don't have that confirmation. For the downside to be confirmed, we need to break the previous low. We need to move on lower, as I put the path in here. So we need to break, move lower, back test, and then come down. Could we just come down in one straight candle? Absolutely, we could. The way we went up here, we could do that as well. There was a little back test here on the 20, so it broke the 20, closed above it, back tested, little candle above it, and then just complete explosion to the upside. We could do that as well. But if there's no technical choice, there is no choice. That's how I take it in terms of taking a position or taking a trade at the moment. So if it's a doubtful position, it's a no. If there are technical reasons and we need at least 3 yeses on the 4-hour time frame at the moment, because we are going to follow a daily move, if we do have those 3 yeses, taking a position with minimum risk is the normal thing to do. Okay, I'll do the same for ETH. I think I have already done it, or I've said it in the chat. Somehow all my charts are on the 1-hour time frame. I don't know why that happened. There we go. So ETH has a slightly different pattern on the daily. Yes, I definitely posted this yesterday. It hasn't yet crossed up on the daily on the stock RSI. Now the MACD, every time I see the MACD printing something like this, it signals a lift is coming, but we don't have that stock momentum crossing up. Of course, for ETH, as we have for the BTC, we have the 20 coming down over the 55, looking very scary, boo-hoo-hoo. If this crosses down, there will be a back test and continuation. So again, the 20 EMA on the daily will be our guideline in this. If we push up and we break it and we close above it, at least today, continuation tomorrow, then we're looking at challenging the previous peaks. If we get rejected, as we've done so here, we're looking at pushing down and breaking the previous lows. That might happen. Now, the way, again, it stayed so close in this area, to me, is consolidating for a lift. That's what mostly what I've seen happen. And again, with my eye, I can see a bullish divergence on the stock on the daily between this bottom and this bottom. So there are reasons to believe that it's gonna go up. I took a trade here. Initially my stop loss was 5% here, but I have lifted it up here, and at the moment it's like 1.2 because I only have a fifth of my capital in this trade. I haven't DCA'd yet, and all I'm waiting for DCAing in is the 20 EMA on the daily. I need to see that turned into support. In terms of buying vectors for ETH, we can see that we have them on the 1 hour. We have 2 buying vectors here at the bottom of the swing, and generally seeing the buying vectors at the bottom of the swing is a sign that the market makers are starting to build up their longs. We have the stock on the 4 hour crossing up. It was doing the same thing when I went in, but then it started coming down. And if we're looking at the MACD, that's my wave trend, which is very similar to the MACD in terms of, there we go, how it looks. On the MACD on the 4 hour is printing the same decreasing difference in sales and is looking to lift up. But we won't have confirmation until we're past this midline. This midline of the MACD is the same as the midline for the stock. It consolidates, it confirms that a trend is entering either the superior part or the inferior part. And that's where it can get rejected or continue. Now, that's what I've been saying for a week on in the chats, on the charts. And I know it's been quite long, but this is, again, summers happen like this. And in order to show you that, I'll show you some previous summers for BTC and ETH so that you know what I'm talking about. Now, this is the chart, the monthly chart for BTC, and I will be looking mainly at the 3 exits from bear markets. So 2015, again, people break this down into, there are people who break this down into two bear markets, the 2018 and the 2020 with COVID. To me, it's only one, to be honest, with a huge rally in the middle. And then this one that we're in at the moment. Now I'm going to remove the drawings because the relationship with the MAs is what I really care about here. So here was the 2015 one. We had a lift, a drop, a higher high, and then a higher low. When did this higher low happen? In August. Now we weren't so close to the 20 MA on the monthly then. We were just trying to turn the 10 into support. Here we've already done it. We are already above the 5, above the 10, above the 50, but the 20 is pushing down. So it's causing a situation the way it did here. So we can see that when the 20 pushes down in all of the three situations, we only have three, it causes a sideways monthly trend. Sideways monthly, not a fun trend to be in. So here's where in August in 2015 we had the last drop of the bear market, and when we met the 20 MA, we started just trending sideways for 4 months. And that sideways started in November and finished in March. That's why a lot of people are thinking that the bull run is going to come in March or somewhere around the first trimester next year. Okay, so basically what I wanted to show you here is two ideas that I will be looking at in both of the situations. The first one is that we had a push down, a significant sell. If we're going to measure this candle in August, it's a 29% sell before the real build up started, before the parabolic run on the monthly started. And one final push down, and when we met the 20, we trended sideways for 4 months. Okay, now let's have a look at the 2018-2020 situation. To me, this is not a bear market because it's 4 months at the bottom. It's not a bear market. This whole thing is the bear market. That's where I stand as an analyst and interpreter of this chart. Here we had the same situation. We had a final drop before the lift happened. And this final drop was quite considerable. It was the COVID sell-off, and it was really, really abrupt, 55%. Now, when did the sell start? July, August, summertime. It couldn't break the previous peak in June, and when it met the 20 MA, it actually stagnated for 1, 2, 3, 4, 5, 6, 7, 8, sell-off 9. Now we could argue that the stagnation happened because this move was supposed to happen. Yes, that's true as well. So after this move, we have gained both the 20, we've done the final correction, and we continue to the upside. Now, where are we now? Here, the reason why I'm doing this monthly comparison is because it could show us what we're going to be in for the summer or the end of the year. We haven't had this final drop. Some people are saying that, again, this one here, would be it, and now we're going to go parabolic and continue to the upside. We might do so, but in order to do that, in order for this parabolic run to start, we need to gain the 20 MA as support. We haven't done so yet. And in both cases, 2 out of 2, and I know it's not a lot, of the previous times it met the 20 MA, it needed to consolidate before breaking it properly and continuing. So could we have another couple of months of this? Yes, we could. Could we have another drop between 30 and 55%? Yes, we could as well. That's why, again, being mindful of your positions. And even when that drop starts, you know that the indicators will be showing reversal. But even if it shows a reversal, the trend will be broken to the downside. So wait until the next pivot on the 4-hour or the 1-hour comes to short, because until it gets to a minimum, a correction of, I'd say, just to make an average between the two, 35%, and between 35% and 40%, that won't stop. If this is the final pull down before the run. And again, I don't want to sound like a bear. We might, again, I'm looking at the technicals, and the most likely scenario here is that we trend sideways, but in both situations it did a significant correction before continuing. So that's where BTC is in terms of the monthly setup for continuation. We need to get back above the 20. We need to get above the 20 MA and continue. We need a significant candle. So when the 20 MA was gained after the sideways, we got a nice candle, broke the previous high. Next one did the same. And yes, there were back tests on the 10, mainly on the monthly and the 5, but it kept on going. So that's what we need. That's, again, we are meeting the 20, and that's what's pulling us down at the moment in this sideways. Okay, now let's have a look at ETH. ETH has only got 2 situations with the 20. I don't have as much history as I have for BTC. What I have here is, again, before, so it met the 20, closed above it, had 1 month of closing above it, and then the pull down. And the pull down was a higher low, so we shouldn't break the previous low here, and then continuation above the 20. It did consolidate above the 20 for 1 to 3 months before starting its run, so we could have that. At the moment, we are not above the 20. We're in a less strong situation compared to BTC. We are below the 20, and the 20 is coming down like so. It could cause something like this. Now, here's where it was coming down, and what it did is it caused sideways. For ETH, we're not so aligned with the months, because this is July, this is August. They're both down months. So yeah, July was down, and this is August. And then it continues down. So the trend starts to sell in July, we continue down, we do a lift in February, and then a pull down in March, and then continuation. But you can see that they are aligned, both of them, ETH and BTC, when it comes to the start of the new run around March, first trimester of the new year. So that is something to be looking for. Here we also had to break the 50. Here the 50 is support, so maybe it won't take so long. Again, I'd say if we're looking at BTC, which is a little bit more balanced in terms of duration, an average of 3-4 months at the 20 MA would be reasonable, and that would coincide with the end of the summer. I know that as far as I can remember, December and January tend to be quite bullish because people are buying it. But anyways, we need to get past the 20. Once we're past the 20 on the monthly, we can be looking at a lift. We need decent candles for that lift to be confirmed, and we need to keep holding that 20 MA. That's it for me. I wanted to go into some W patterns there, but just to draw your attention, once we broke this W, we stayed there for 3 months. For ETH, we broke this W as well, and we have been here already for, this is the 4th month. So we need to see either some sort of continuation, or we might actually see a snappy pull down to catch if there is any liquidity, and there is because I have checked around 1600, maybe even 1400. If we are to put down a 30% drop, that would take us to 1260, 1270, which is, we know it's a famous level. The 70, 1370, 1270, they're famous for ETH because it's been there for so long. So again, just to summarize it, it seems like we are meeting important resistance on the monthly. This is what's holding us in place. In previous times, we spent anywhere between 4 months and 8 months trying to break it. In order to confirm that it's broken, we need closure above it and then continuation with a significant candle, just for you to have it clear in your mind. That is it for me. I hope you have a nice weekend. I'll be posting the updates on the hourly chart using Traders Reality today, because it's Friday and we're probably gonna have volatile Friday. Have a fun time at the weekend, and I'll see you guys on Monday.